Welcome to the DX Today podcast, your daily deep dive into the AI ecosystem. I'm Chris, and joining me as always is Laura.
Happy Friday, Chris, and to everyone tuning in. We have got a story today that I think genuinely rewires how you should think about the entire AI industry going forward from this week.
Okay, you have set the bar very high in the cold open. Walk us through what happened yesterday, because I know it landed on May 28th and the whole industry is still digesting it.
Yesterday, OpenAI announced the launch of something called the OpenAI Deployment Company, which the press is already shorthand calling DeployCo, and it is a brand new majority-owned consulting subsidiary.
A consulting subsidiary from OpenAI, the same company that has spent the last 3 years insisting it is a research lab building artificial general intelligence and not a services business in any traditional sense.
Right, and the financial commitment is what makes it impossible to dismiss as a side project. DeployCo launches with more than $4 billion of initial capital from a consortium of 19 investment firms.
$4 billion is not pocket change. Who actually wrote those checks? Because the cap table here tells you a lot about how seriously the institutional money is treating this pivot.
TPG is the lead investor. The co-lead founding partners are Advent International, Bain Capital, and Brookfield. The founding partner ranks include Goldman Sachs, SoftBank Corporation, Warburg Pincus, B Capital, BBVA, Emergence Capital, Goanna, and WCAS.
That is a who's who of global private equity and growth equity. The presence of names like Brookfield and Warburg Pincus suggests this is being built to operate at infrastructure scale and not as a boutique advisory shop.
Exactly. And on the same day, OpenAI announced it is acquiring Tomoro, which is a London-headquartered applied AI consulting and engineering firm that has been building enterprise deployments since around 2024.
Tell me about Tomoro, because I confess this is not a name I had on my radar before yesterday morning. Who are they, and what kind of work were they doing in the field?
Tomoro brings approximately 150 forward-deployed engineers and deployment specialists to DeployCo on day one. Their client roster reads like a Fortune Global 500 sampler tray, which is a big deal.
Drop some names on me, because I always think the texture of who actually pays for early AI consulting work tells you what verticals are real versus which ones are still pure hype cycles.
Tomoro built AI concierges for Virgin Atlantic and game support agents for Supercell, deployment systems for Fidelity International, and live engagements with Tesco, Red Bull, Mattel, and the National Basketball Association. That is serious enterprise traction.
Those are not pilots or proofs of concept. Those are live production systems with real revenue and real reputational risk attached. Tomorrow is clearly not just slideware consulting, which I think matters enormously here.
Right, and that operational credibility is exactly what OpenAI is buying. You cannot manufacture 150 engineers who already know how to ship inside complicated, regulated enterprise environments. You have to acquire them.
Okay, so the capital is in place and the human capital is in place. Now help me understand the actual model, because I keep seeing the phrase forward deployed engineer in the coverage.
Forward deployed engineer is a role that Palantir basically invented over a decade of defense and intelligence work. The idea is that you embed your own engineer physically inside the customer organization for months at a time.
So this is not a sales engineer dropping in for a demo and then leaving. This is somebody who sits at the customer's desk, learns their data, and writes custom code against their actual workflows day after day.
And the cultural fit piece matters more than people realize. A great FDE has to behave like a trusted internal employee while quietly importing the secret sauce of the frontier lab they actually work for.
That dual identity is brutally hard to scale. Palantir struggled with it for years, and arguably only recently cracked the recruiting and training playbook needed to produce FDEs at industrial volume.
Exactly that. The FD figures out where I can make the biggest impact, redesigns the workflow around it, and then turns those gains into durable systems that the client owns and operates after the engagement.
That is a fundamentally different commercial motion from selling API tokens. It has way higher revenue per logo, way higher gross margin per relationship, and way deeper lock-in once the system is woven into operations.
And critically, it generates something that is even more valuable than the consulting revenue itself. It generates proprietary telemetry about how frontier AI actually performs inside messy real-world enterprise environments at huge scale.
Which feeds back into model training and post-training, giving OpenAI an edge over rivals who only see synthetic benchmark data and public internet text. That is the Palantir flywheel applied to general intelligence.
The Decoder publication put it really sharply yesterday. They wrote that DeployCo is building a moat from workflows no lab can simulate. That phrase has been ricocheting around the AI strategy circles all night.
Let me push back on the bull case because I think we owe listeners the other side. OpenAI just declared war on a chunk of its own go-to-market partners with this announcement. Did they not?
That is the elephant in the conference room. Accenture, Deloitte, EY, KPMG, Capgemini, IBM Consulting, and the strategy houses have all been reselling OpenAI capacity for 2 years now in massive volume.
And those firms collectively employ probably north of 3 million consultants worldwide. They were generating substantial OpenAI revenue and providing the trust layer that risk-averse enterprise buyers needed before they would commit budget.
It gets even more awkward when you look at the cap table. Bain Capital and McKinsey are partners in DeployCo through their investment vehicles, while Bain and Company and McKinsey and Company compete with DeployCo for the work.
That is a deeply strange dance. You are investing alongside the company that is going to undercut your own consulting practice. Either these firms believe the pie is growing faster than the share loss, or they are hedging.
I think it is mostly the pie argument. The total addressable market for AI transformation consulting is being estimated at roughly $375 billion globally over the next 5 years.
When the pie is that large, even strategic frenemies make sense as financial partners. You would rather own a slice of the disruptor than be entirely on the wrong side of the disruption curve.
Plus, DeployCo is explicitly positioning itself as a complement and not just a substitute. The pitch is that they handle the deep technical AI integration while traditional consultants handle the change management and process redesign layer.
That framing is convenient, but I am skeptical. It holds for long. Once you have 150 engineers embedded at Fortune 100 clients, the natural gravitational pull is to expand scope into adjacent work.
History agrees with you. Palantir started as forward-deployed engineers and ended up offering an entire enterprise software platform that competes with Salesforce, SAP modules, and bespoke data warehouses across regulated industries today.
Let us also talk about the parallel move from Anthropic, because the timing here is not coincidental. They announced their own enterprise services push earlier this month with KPMG, did they not?
On May 19th, Anthropic signed a global alliance with KPMG that puts Claude in front of 276,000 KPMG employees through something called Digital Gateway, which is the platform KPMG clients actually use.
So Anthropic is going through a Big Four channel, while OpenAI is building a vertically integrated alternative to the Big Four entirely on its own balance sheet with private equity rocket fuel underneath it.
Two completely different theories of distribution. Anthropic believes the existing consulting ecosystem is durable and rentable. OpenAI is wagering that frontier AI deployment is structurally different enough to deserve its own native services layer.
Both bets cannot be right at the same time. Or actually, they probably can be partially right because the enterprises are large enough to support both motions for the foreseeable next several years.
True, and we should not forget Google, which has been quietly building out its own forward-deployed engineer organization through Google Cloud Professional Services and through deeper Gemini integration partnerships with Deloitte and HCL.
So the whole frontier lab category is converging on the same insight at roughly the same moment. Models alone do not win enterprise revenue. Models plus humans embedded in the customer's reality win enterprise revenue.
And the talent war for forward-deployed engineers is about to get absolutely vicious. These are people who can write production code, understand business context, navigate regulated environments, and explain transformer behavior to a CFO in the same meeting.
Those people are unicorns in the labor market. Tomoro had built a recruiting pipeline for that profile. Acquiring them outright is significantly faster and probably cheaper than trying to grow 150 FTEs organically.
Goldman Sachs analysts put a back-of-envelope estimate on the deal value last night, and they think OpenAI effectively paid somewhere in the neighborhood of $4 to $6 million per Tomoro engineer.
That is breathtaking, but it is not crazy given what these people will generate over the next 3 years in services revenue, in model improvement signal, and in account expansion across mega-cap enterprise logos.
Right. And the structural question for every other AI startup right now becomes really uncomfortable. Are you a model provider, a tools provider, or a services provider? Because being all three at once is incredibly hard.
That is the strategic Rubik's Cube of the moment. Smaller labs cannot fund a $4 billion consulting arm. They will have to pick a lane and partner aggressively to get to enterprise scale revenue.
Which probably accelerates consolidation in the middle of the market. Companies like Cohere, Mistral, Aleph Alpha, and several others will either get acquired or carve out very narrow vertical specializations to survive this squeeze.
We saw exactly that pattern with the Cohere and Aleph Alpha combination in April, where two regional model labs merged to position around sovereign AI for European and Canadian government and regulated industry buyers.
And honestly, the smartest Tier 2 and Tier 3 model labs are probably already exploring whether to build their own DeployCo-style services arm or to partner exclusively with a big system integrator instead.
Either path is viable, but the strategic identity has to be chosen with conviction. You cannot be a half-hearted services business and a half-hearted research lab simultaneously without confusing your customers and your investors badly.
Expect a lot more deals like that in the next 12 months. The frontier model layer is going to become a small handful of players, while the deployment and services layer goes through a Cambrian explosion of niches.
Before we wrap, what should listeners actually watch for in the coming weeks to see whether DeployCo is hitting its targets or struggling to translate the capital and the talent into real enterprise traction?
3 signals. First, watch which big logos get announced as anchor DeployCo clients in the next 90 days. Second, watch FD headcount growth and where they are hiring geographically. Third, watch for consulting partner pushback or defection.
That is a fantastic watch list. And I would add a fourth, which is whether OpenAI starts releasing any sort of revenue disclosure for DeployCo, because that will signal how serious they are about treating it as a standalone business line.
Agreed. If we see DeployCo revenue broken out in the eventual S-1 filing for the OpenAI IPO, that tells you it is being positioned as a meaningful contributor and not just a strategic loss leader.
Speaking of which, the OpenAI confidential IPO filing dropped just a week ago. So DeployCo is almost certainly part of the story they are telling public market investors about durable, diversified enterprise revenue going forward.
Which makes a lot of sense, because pure API revenue has lower multiples than services revenue. And Wall Street loves a clean services line item with high attach rates and visible long-term contracted backlog.
That is a great place to leave it. The takeaway for everyone listening is that yesterday's announcement marks the moment Frontier AI Labs officially became hybrid services businesses competing inside the consulting industry directly.
And the next 5 years of AI strategy is going to be defined less by who has the best benchmark scores and more by who has the deepest embedded relationships inside the largest enterprise buyers globally.
That's all for today's episode of the DX Today podcast. Thanks for listening, and we'll see you next time.